Let's bring in Holly Mazzocca now of Bartlett Wealth Management and Ayako Yoshioka of the Wealth Enhancement Group for more on this and the markets in general. Holly, nice to have you here. Do you own Apple? What do you think of it? As we said, always got the benefit of the doubt, or at least most of the time. Right now, it's like, okay, show me what you got.
I think that's exactly where we are right now. We have been fans of Apple over the long term. As we think about putting new money to work, as a lot of these stocks have corrected, 15% plus, we are more mindful of where do we go from here in this story? And I think that's the big question on investors' minds. Apple has always favored this idea of the asset-light model and depended on others to be the forward-facing, to be the explorers. Think about the way that they work in search, for instance, with Google leading the way in search, and they're quite dependent on that. And then Apple perfects the consumer experience. And I don't know about your experience with Siri, but my personal consumer experience is not yet perfected.
Well, it's interesting that that's the way you characterize it, because Apple is really not known for being first in much of any of the things that they do, but they're usually known at being the best in everything that they do. And now we're questioning that.
Absolutely. But, I think one of the things is that with Apple, you have such a loyal customer base. But as an investor, we really are looking for that acceleration in the upgrade cycle. I think just given the overall macroeconomic backdrop, consumers have less disposable income and are less likely to upgrade. And so anything that would accelerate that upgrade cycle is what investors want to see.
I mean, Holly, you knew at some point that investors weren't going to tolerate these stocks going down that much, right? At some point, you would have buyers step in. Did we reach the point where multiples corrected enough that it was just time to say enough is enough?
I think that's where we are right now, where we have seen this nice correction and we're starting to leg into it. The question for investors from here will be, will we get enough policy certainty to make that next big investment? So instead of, like we saw on the stock charts with Apple just bumping along, will we actually get something exciting? I think Aya brings up a great point about that product cycle, and Apple is very dependent on what's coming next. Also, this idea of what is happening in the hardware. You suddenly have really interesting options if you are a Chinese consumer that you didn't have several years ago.
Holly just mentioned policy certainty, and I'm wondering how you think about that in the context of this market. It's been anything but, to be frank, and that's why you've had the market react to the twists and turns at every move that it's done. At some point, do you think we're going to get a little more certainty? As I said yesterday, we get past all of this stuff, and then we get to the good stuff. And by the good stuff, I mean the stuff that people were talking about coming into the year. Deregulation, tax cuts, and all of those things, and deals, by the way, that were going to be a stimulant to the market.
Yeah, you have to take your bad medicine first, I guess. However, I think that we'll see if we get this sort of all clearing event next week on April 2nd. But then I think that we're going to still see some muddling along in the markets as we digest guidance from earnings season sort of shortly thereafter. So I think it's going to continue for a little bit long in terms of the overall market volatility.
How do you see that? Do you actually think we're going to get some level of certainty to calm the market? We're calm today because we haven't gotten anything.
Right. Where we see government policy right now is it's a high wire act. There's a lot at stake. And investors were expecting a very favorable business backdrop coming into the year. It was quite supportive. That's why we had valuations where they were. And what we're hearing now is even the Federal Reserve, in the recent commentary from Chairman Powell, is saying we're in this balancing act between slowing growth and potential rising inflation. And we have to figure out what this looks like going forward. I think the real question from here comes down to this idea: will the sentiment indicators that we're hearing in the sentiment surveys play out in real life as CEOs start to slow down some of those major purchases?
Are you still, banking on the fact that the Fed's going to cut rates a couple of times this year, and that's going to be the thing at the end of the day that puts this market forward?
We never want to bank on a Fed put. We really believe in preparation over believing that the market is just going to slide all the way through. So I think for us, it's about making sure that you are well diversified, and that diversification is a form of defensiveness.